Hey, we're live. If you guys catch this while we're on here live, please drop in the comments. Let me know if you can hear me okay. Make sure my audio is right so I can get started. I just got a short live stream for you guys today. I want to go over a concept with you that'll actually help you understand risk, how to think about risk, money, how to accelerate your wealth while you're protecting yourself on the downside. So if you can hear me, drop in the comments, give me a thumbs up. Let me know if you guys can hear me okay on the stream. So I will jump into here in just a couple of seconds here. So what we're going to talk about today on this particular live stream really quick. I'm not going to be on here for too long. So if you watch it on replay, drop it in the comments. Let me know. Let me know that you checked it out. So I'm going to talk about how do you balance when it comes to your money. How do you balance the amount of risk you're taking with the expected upside? Right. So over here, going on this side is the risk level. Over here is upside, the expected upside. Because wherever you put your money, you've got to look at what level of risk am I taking and what am I going to get in exchange for this risk I'm taking? How do I make sure I can get my assets building, compounding, and have it grow exponentially without putting a lot of it at risk? How do I do that with all the different places I can put money? So there's lots of places you can put your money. I'll go over here, and this is kind of a risk chart, risk reward chart. And if you guys can't see it, I'll say what these things are, and I'll show you how you can actually balance between all of these. So on the bottom, lowest risk, lowest upside is cash. Your money's sitting in a bank account. It's not really earning anything for you. In fact, it's losing money due to inflation, right? So next you have bonds. Next you have like high yield bonds. Those are corporate bonds. Things generally have higher risk, so you should have a little bit of upside. Then you have things like real estate properties. You have life insurance where you can use certain types of life insurance policies to store cash inside of a policy. Then you have developed market stocks. Then you have emerging market stocks. And then you have cryptos, and maybe on the top here you might have like NFTs or something like that. So this is kind of a risk and expected upside chart. Now, when it comes to your resources, your money, you have to think about what are you trying to achieve, and then when it comes to where do you deposit, where do you put that money? Besides, like if you have a business, of course, you want to invest in yourself, number one. Then you want to invest in your business. But beyond that, if you're in a position where you're creating a surplus in your business, in your household, where can you put assets? Where can you deploy your paper currency into assets so that that can appreciate? Because right now, if you're sitting in cash, you're losing value. Cash is being worth less and less and less every single day. If you don't buy assets, you're going to get left behind by far. So we'll talk about what types of assets to do anyway. I'm going to dive into this a little bit deeper during a webinar I'm doing this Friday, November 3rd. So if you see this before then, it's going to be Friday, November 3rd at noon Eastern time. That's going to talk about how you become your own bank. This particular live stream, though, I'm just going to do a short one that's talking about different asset classes and how do you balance risk versus your expected upside and how to handle that. So bonds, high yield bonds, most of these right now are producing below inflation, below the rate of inflation. What does that mean for you and your money? It means people who have money sitting in cash, that money's losing value every day and every year. I have a lot of clients who they reach out to us because they have their money sitting in bank accounts. They have large sums of money sitting in bank accounts because they were trying to keep their money in reserves. The problem is they're watching inflation eat into that money. So people in cash bonds, high yield bonds generally are going to be the losers in this cycle because you're not even keeping up with inflation, and the asset you're holding is below inflation, so it's not even keeping up. So beyond that, how do you balance all of these? There's a method of balancing risk and reward called a barbell method, which is where you put some of your assets into something that's relatively safe and stable, and then that allows you to take more chances on the upside, and you minimize the parts in the middle between your safety and the level of risk that you're taking. So, for example, a lot of people have been buying property, right? They've been buying real estate. If you look, you'll see real estate asset values have gone up. Why? Because when inflation hits, real assets go up in value. So real estate has gone up in value. Another place people can store money is inside of life insurance policies. That's something we do a lot of. So a lot of our clients actually on this end of their risk level because you're not taking on any risk inside of a life insurance policy. So they store money inside of life insurance policies and leverage that to buy real estate, and those real estate assets have increased, further increasing their net worth. Right. So another thing that people are started looking at doing is crypto on this other end of the risk spectrum over here represents tremendous upside, but it has much higher risk than your normal thing. Why? Because it's new, relatively new. People don't understand how it all works. A lot of people don't get it. All of that. So over the last for years, I've been kind of paying attention to crypto, but especially in the last few months or so, in the last year or so, I started to do a deeper and deeper study on it to understand what was happening in that space. And then I've been around people who are very, very smart, smarter than me in that space, very, very smart about it, knowledgeable. Some of them are guys I know personally, guys and some ladies in there, and they've done very well in that space. They're some of the top people in that particular space. And so I've been understanding how you can actually create more stability using cryptocurrencies, digital currencies, and tokens, and all the different advances inside of that world, and how you can actually use it to accelerate your wealth and do it while minimizing risk. So even though it's up here on this risk chart, most people are guessing and they don't know how it works. And so they're guessing, and so a lot of times they can get wrecked. They're constantly chasing the next token, the next coin that they think is going to go up in value or shoot to the moon and all that kind of stuff. But they actually miss a lot of the fundamentals. If you can understand how these different things work, you can actually build a solid portfolio for yourself using assets like life insurance and real estate as a foundational piece of your risk tolerance, and looking at things that have huge upside potential, whether it's leveraging these assets for businesses or even looking at how do I participate in digital currencies. Look, these things are becoming more and more accepted. There are lots of companies that have their reserves in digital currencies. One of the reasons why this has been accelerated is people are having less and less confidence. The confidence in our US dollar is going down in value. People are less confident about the future of dollars than they are about something that has upside potential. So this is not a whole big talk about crypto, but it's understanding economics and basic math. Number one, our US dollars, the supply got increased. 25%, more than 25% of the dollars that you see today did not exist before 2020. That means that they printed more money and pushed that into the money supply. So you don't have scarcity. You have just a bunch of money, which then prices have to rise to match the new supply of the money. It just randomly created out of nowhere, not backed by anything. However, when you have something like Bitcoin that has a hard limit of 21 million, you have a certain amount of scarcity, just like gold has a certain amount of scarcity because there's only a certain amount of gold that can be mined. So it's the same thing with Bitcoin. There's only a certain amount of Bitcoin that can be mined. So what does that mean? It means it is deflationary by nature because somebody can't just print a bunch of them like they can with dollars. Because of that, it's accelerated people's interest in alternative assets. Things that used to generate your high yield savings account, that used to be a place where you could store money, is not an option for people anymore because it's not even keeping up with inflation. So people are always looking for where can I stay ahead of things, that the problems I'm going to be having. So when you look at balance, this looks like a barbell because if I'm using safety and cash flow over here, I'm leveraging life insurance to buy real estate that cash flows, and that gives me a stable base. I can then go into higher risk assets because I have a foundation of stability. I can start adjusting more towards higher risk, higher return stuff because, especially if you know what you're doing, crypto doesn't have to be just excessive risk. You can actually do it in a way where you can get consistent returns without trying to shoot and go to the moon like everybody else is trying to do and hoping and praying every day. So that's what I wanted to come on here and share with you guys. I'm going to do a webinar where I dive deeper into how to become your own bank, because if you don't start to take control of your money, you're going to keep going backwards and losing it to inflation. So the website is going to be 6buildingblocks.com/register. And you can go on there, you can register for our free webinar we're going to do Friday, noon Eastern time. There's the link up here that's on here on the screen. You can also go to 6buildingblocks.com/BYOB for Become Your Own Bank, and how you can leverage different asset classes to where you can store money in one location, right? You can have money working in one location and leverage it to have it money working in a second location at the same time. So this is a way that there's ways you can do that safely and effectively to where you can accelerate your wealth, and there's tax advantages that you can have using some of these strategies. So we're going to talk about that on Friday. If you are a business owner, if you're somebody who has money sitting idle in bank accounts, you want to be on this webinar. If you own a business and you're concerned about inflation, you're concerned about your staff, how are your staff also going to handle inflation? How is your business, your company going to handle price increases? What is it going to look like when you have to increase your prices on your customers? Because prices for you have gone up. If you're in that boat, you should definitely be on this webinar. If you're somebody who's you're in sales, you're in marketing, you have the ability to generate a high income, you definitely want to be on this webinar, because we're also going to talk about how you can use strategies that can have tax advantages, how different things that you can do, you can minimize risk and increase your upside. Especially if for some of you trying to get into crypto, you got to understand what the tax situation is going to look like if you did go to the moon. What if you put money into something and all of a sudden you did super well with it? How are you then going to protect that from taxes? How are you going to minimize the tax hit of that those kinds of things happening to you? So very important to be on this webinar. It's going to go for like a 30-45 minute webinar. We're going to go Friday, December 3rd at noon Eastern time. So we're going to go live. And register for the webinar. Even if you can't be live, register for the webinar. And when the webinar is done, we'll send you a link so you can watch the replay. So make sure to get registered for it today. I'll go over some of these concepts in depth. I'll talk about strategies that banks are actually using to earn higher interest rates while they're paying you just a little tiny fraction of that. I'll show you how wealthy people, how even the current president of the United States, he actually uses some of these strategies for himself. He's been doing this since the 1980s. And a lot of people don't really understand the finances of high net worth people, but they do things a lot differently than what the masses do. So if you want to understand those kinds of things, how they work, how they actually work from a micro and macro point of view, how you can actually deploy some of these strategies and start using them for yourself so that you can accelerate your wealth, increase your upside while managing your risk on the downside, make sure to register for this webinar, where I'll talk about all of that in more detail. So we look forward to seeing you there. Jamie says she is totally stoked for this. We look forward to seeing you guys there. And if you know other people who are particularly business owners, high income earners, tag them or share this video with them so that they can join us on this webinar, because the things we'll cover, I think you'll find very exciting, and will solve a lot of problems that people are having right now, especially with the massive increase in inflation. They told you inflation was just going to be short term. It's going to be transitory. It's not transitory. Inflation is going to be here for a longer period of time. And inflation affects the middle class more than anybody else. And so if you're trying to increase your income, increase your revenue, increase your net worth, and you're building your assets for the future, you have to understand impact of inflation. It's one of the three enemies of your wealth. Three enemies of your wealth are taxes, inflation, and market losses or market manipulation. So whatever you do, you have to figure out how to grow your wealth without losing money, and how to do things in a safe way so that you can accelerate and speed up reaching your goals and doing the things you really want to do when it comes to your assets. Money is just a tool to help us reach some of the goals and have freedoms that we want to have. So look forward to seeing you guys on the webinar. Website again is 6buildingblocks.com/BYOB. So number 6buildingblocks.com/BYOB stands for Become Your Own Bank, and how you can leverage assets to be working in one location and leverage it to work in other locations so that you can accelerate the growth of your assets and your wealth. All right, guys, we'll see you there.